Hi, I'm Marlene, one of your attorneys at Trellis Legal. Choosing your business entity is an important step in your for-profit or nonprofit venture. The entity you choose can define your tax, management, and investment structure, and can establish ownership equity and the terms between business partners. This video is intended to help you begin to decipher the differences between your different entity options. We'll start with for-profit options. I'm going to focus on the most traditional for-profit options, which are an LLC, an S corporation, or a C corporation. There are also general partnerships and limited liability partnerships, but these are commonly used for law firms and other specific industries, so you can learn more about those below by reading. An LLC, or limited liability company, is a common entity for small businesses and businesses with a smaller number of investors and employees. LLCs are made up of members who are also the owners of the business. LLCs have a lot of flexibility, which is nice. They can have pass-through taxation, which means that the business is not taxed separately from its owners, or it can elect to have S-corp taxation, which allows the owners to take advantage of certain tax code benefits once profits increase, and pay employees through a payroll. LLCs allow the members to choose their governance. Other than the basic provisions provided under PA and federal securities laws, members can design who makes decisions in the company and how, who owns shares, vesting procedures, and any other standards they wish to impose. LLCs also have more flexibility in relation to the capital contributions of the members and can create different levels of shares within the company. S corporations and C corporations, or as we often call them S corps and C corps, are common for businesses that wish to seek big investments or wish to have more levels of management, accountability, and structure. The corporation structure utilizes more formality and allows its managers flexibility to set salaries and better manage options like health insurance and benefits. Corporations also have boards of directors, which oversee the company and elect the company's officers. This is much different than the member-owner structure of an LLC. There is also a yearly filing requirement for corporations that LLCs in Pennsylvania aren't subject to. C corps are subject to double taxation, which means they are taxed on the corporation's net income and then also taxed at the shareholder level once profits are distributed. S corporations are a special tax election for a corporation. S corps are only subject to shareholder taxation, but are also subject to pay a payroll tax. A further distinction is that S corps are limited to 100 shareholders, while C corps can have an unlimited number of shareholders, which is good for larger companies that are looking to get a lot of investment. In this next segment, I'm going to focus on nonprofits desiring to be charitable organizations under 501c3 of the Internal Revenue Code. These are the most common form of nonprofits, and what you generally think of when you hear the term nonprofit. In Pennsylvania, you can choose a corporation or LLC structure as described earlier in the video. Choosing whether to be a nonprofit LLC versus corporation is up to the individual organization. The IRS allows you to gain tax-deductible status under either. The choice is similar to those looking to form a for-profit. How much structure does the organization want? How big is the organization? Corporations are the typical structure, as they help to provide layers of decision-making and oversight for compliance with the generally strict requirements of being a 501c3 organization. In addition to the state entity filing, nonprofits also have to file for state tax exemption and federal IRS tax exemption under separate forms, and attest that they have proper nonprofit government documentation and will follow the required nonprofit principles and limitations, such as following a dedicated purpose, not allowing for private inurement, and filing yearly reports. If you know the type of entity you need, we'll get you all set up. But if this all seems overwhelming, don't worry. That's what we're here for. Read through the info below and then set up a meeting with us to talk through and answer any questions you might have in deciding which entity is right for you and your business or nonprofit. Also, because entity formation involves answering a lot of tax questions, we advise you to consult with an accountant as to the best pathway forward for you and your company financially. We look forward to talking with you.